Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In yesterday's market action, we did see an all-time new high be rendered, and we traded up to around $33.95 and then closed slightly below the all-time high. This was a greatly anticipated event. It's happened now, and market participants continue to be very nervous around these numbers at this level. I mentioned in yesterday's video that there are a number of risks that are starting to unfold, and they continue to be evident even after the all-time high. A key element that I've been talking about over the past several sessions is our short-term database. We are continuing to see liquidation there and starting to see rotation of many of these trades that have been on sometimes for up to 3 and 4 months. So they're getting very long in the tooth, and we're seeing that rotation. I'll go through that in detail here in a few minutes. The other thing that's occurring is a contracting volatility range, and that has not expanded at all. Even though yesterday's volatility was slightly higher, there is no real evidence that we're starting to see an expansion and that this market is going to be able to continue higher. As we look at yesterday, the fundamentals that came out was that the housing starts came out up 22%. Some of the best estimates were about 15 plus. So once again, these numbers continue to beat the market. This was the reason why I covered lumber in yesterday's video, because this is the reflection of what's going on in the housing market. So it was a pretty easy call to expect to see these numbers come out substantially higher. There are also a couple of earnings reports that are coming out today. Lowe's and Target. The Lowe's report is likely to be very strong in reflection with the housing start numbers and other elements that I've been talking about, including the lumber prices that I discussed in yesterday's video. So there's going to be a continuation of that pattern. The other primary earnings that I think will be important today will be Target. Just like with Walmart yesterday, we saw blowout numbers from Walmart. Target has also been upping their game in the online area, as everyone has, putting a little bit of competition toward Amazon, but overall they're likely to do better than expected as well because of the change in the business model that they've been running over the past several years. So these are positive events. The final thing that we're going to see today will be the FOMC meeting minutes. I don't expect any surprises in the minutes. If anything, we're likely to see more of a positive tone coming out, but it's very hard to tell because market participants are very nervous at these levels of the markets. As we see NASDAQ continue to punch new highs out and the S&P rendering its new high yesterday, the Russell and the Dow Jones were negative. There's a lot of apprehension around the leadership in the markets. I've been talking about this for a while, so I expect to see some leadership change, but over the last several days we've seen some backfilling, and it's likely to continue to consolidate before we start to see any new leadership emerge, and this may not be for several more weeks. You may recall that one of the things that I talked about is we're going to have these dog days and a slump in the market. I talked about that several weeks ago. We really haven't had a slump. We've seen a continuing move to the upside. The large cap tech stocks continue to move the markets forward, and it's also helping to drive the S&P forward. We're not seeing that same momentum emerge in the secondary markets in the mid cap or the Russell or the Dow Jones. Have been very choppy at these levels. From my viewpoint, there continues to be some risks that are emerging here. I'm not convinced we're just going to blow to the top and go through a next level rally. I believe there's some things that have to be dealt with before that's going to happen. Let's go ahead and take a look at the charts and see what they're telling us for Wednesday. Beginning with the review of the WaveTech short-term database, as I mentioned in the opening comments, we have seen quite a bit of selling. There were 641 sell signals between daily 1-2 and 3-2, and there were 138 buy signals, giving us a net negative rotation of 503 stocks. This has caused the database to drop from a 76.8% bullish yesterday down to 74.8%. And as I've been discussing over the past several weeks, continue to expect to see this database start to sell off, and the key point on the downside will be a 68% bullish. If we move below that level, that will set the tone for further liquidation. It is also one of the risk factors that are starting to emerge in the market. There is a substantial amount of trades that have been long over twice the duration that we normally see, and this has been caused by this V bottom. So what we're likely to see is a lot of these trades that have been on for as much as 3 and 4 months are going to start to roll over. Typically, there's only about a 35-day holding period, and the standard deviation is up around 50, and we've seen a lot of stocks at 75 and 90 days plus. Interesting, looking at the short-term database, as we've now moved to a percent profit fulfilled of 90%, 89.9% of all the trades that were issued by the models that are being held have reached 90%. I've not seen this type of number before. This is at least a standard deviation beyond normal. This is another warning sign that we're going to see these models start to roll over. I will discuss here in a couple of minutes in the technical section on the S&P why I believe this is an important factor to understand and why it tells me that there is some potential downside coming in this market. Beginning with the S&P cash, you'll notice that the market grid continues to contract, and this is one of the elements that I discussed in the opening comments. It has dropped to 16.72. As I mentioned in yesterday's video, if it declines under 14, that's going to signal a short-term top, and we're going to see a rollover. There's going to be some downside that's likely to unfold over the next several days. Now, in spite of trading at an all-time new high yesterday, we printed above the 33.93 level. We printed 33.95.06. When we went above the number early in the session, it was right at the R3 number on the market grid yesterday. We saw a sharp reversal, traded all the way down to S3, and then rebounded all the way back to R3. And the reason why we were able to trade that range like that yesterday, because of the expected range is so narrow right now. Now, we ended up having a 25 handle range yesterday, so it was slightly expanded, but not enough to move the meter on this 3-day volatility indicator. And this suggests that there is some risk in the market here. The key level today is going to be 3393.73. We need to get above that number in the first 2 to 3 hours of the session. If we fail to do that, then we're likely to see an S2 print, which would be 81. The possibilities are that the STX number of 3373 level could be printed, but there's substantial support at that number. I don't expect it to break through, as the 10-day moving average is right at that level as well tomorrow. So there's going to be substantial support at that number, but we could see that tested if we can't get above that 93 number. If we do get above 93.73, then 33.98, 34.02 is likely, but I don't see the impetus for a lot of strength tomorrow. As I've discussed many times, this rally that we've been seeing is a classic creepy crawler. It just goes up in low momentum, low volume. Everything is very low. We only saw 4.7 billion shares traded yesterday, which is about 2 billion shares from where we were just about 45 days ago. So this pattern that is unfolding here is weakening, and it is likely to have a slight rollover, could materialize into something larger. The numbers that will be important to understand what the probabilities are if we don't get above that 33.73 number and we do close lower tomorrow, Wednesday, then we're going to see a potential move down into the market grid on the weekly that I have on the screen here, moving down toward the 33.22 to 33.07 level. I'm just going to go back to the daily chart just for a second here. You'll notice that on the moving averages, that 3306.67 is the 21-day moving average. The way this is setting up is that we could see a 3 to 5 day move down toward that level. And the way that volatility kicks up on the downside, we could see that printed almost immediately. If we do see that volatility increase on the downside, then that will set the tone for much lower prices. I'll discuss that if we get some of these closes that will trigger those events. The final market I'm going to cover tonight will be gold. Continues to find resistance between 2015 and extreme around 2040 is an extreme right now. We have not printed there. The highest that we printed was 2024. We could continue up in the grid toward that 2046 you'll see is on the grid as R3. But my expectation is that we've already broken down. We're going to see an S2 low, possibility of going to S3, which would be 1979. The metals are going to continue to struggle up. As I've been discussing, we're going to see just a trading range set up, and the trading range that it's going to be most evident on as far as the market grid and figuring out where it's going to trade will be the weekly grid. So far, we printed up just above the R2 number. My expectation is that we could see a trade down to S1. I think the daily range numbers are going to represent support as we move down in this pattern. 1991 today with extreme expectations, 1979 to 1969. I'm not sure we're going to see a 1919 print this week, but there is a lot of potential for weakness in this market at this time. This will complete the video for tonight. Remember, we have the live stream tomorrow. It's at 1:30 New York time. We'll see you then, and thank you again for watching.